Hey Costanza, you work in accounting, right?
Oh hey Kramer. Oh yeah, I sure do. Why do you ask?
Well, I figured that you could hopefully clear something up for me.
Oh, yeah? Now what could that be?
I just wanted to know what are capital expenses and revenue expenses. I don't understand, they're both expenses, right? So why do they have different names?
Oh, there's quite a defined difference between the two of them. As in, capital expenditure is the expense of capital items. Things like machinery and vehicles, which are called fixed and intangible assets, which means they will stay in the business for a long period of time.
Okay, so if that's capital expenditure, what's revenue expenditure?
Well, revenue expenditure is the spending on items on a day-to-day, or regular basis. These are the expenses that are typically shown on the company's profit and loss account. These types of costs can vary on the business, but typically they're usually premises costs, administrative costs, staff costs, selling and distribution costs, finance costs, and the costs of purchasing stock.
Oh, I see, I get it now. So what about revenue and capital income? Is there a defining difference there too?
Well, there is, but I've got some heavy workload I need to clear, so I can't tell you much more right now. My best bet is that Elaine could tell you anything else that you need to know.
Oh, okay. Where can I find her?
I think I heard her say she was heading over to the water cooler, and then up to Mr. Steinbecker's office to talk to him about an issue with our accounts. I'm sure you could catch her if you go now.
Alright. Thanks again, George. Oh hey Elaine.
Hey, Kramer. I was just about to head up to Steinbecker's. Come up with me, we'll talk on the way.
So, I kinda just wanted to ask you something about accounting.
Oh sure thing. Shoot.
Well, I was talking to Costanza earlier, you know, George. He's in accounting too.
Oh, yeah, I know George. What about him?
Well, I was asking him about things like capital and revenue expenditure, because I didn't know if there was a difference or not. And then I asked him about capital and revenue income, and he told me to ask you, because he had some important work to do.
Oh, alright. Yeah, sure. I figure I could answer any questions you have.
Well, is there much of a difference between capital and revenue income? They're both income. Does it matter that they're put under different names?
Oh, it matters a lot. Much more than you think. In terms of technical accounts it matters, but what you want to know about is the difference. Well, capital income is the money invested by the owners, or other investors, that is used to set up a business or even buy additional equipment. It tends to be used by things that will stay in the business for a medium to a long time. In example, fixed assets. You already know about those, right?
Yeah, George explained those to me.
Alright, good. It's also used to buy opening stock, but as the business develops, stock should be paid for with sales or revenue income.
So really, capital is long-term? As in the expenditure of long-term items, in the income used to purchase fixed assets that will last for a while?
Yeah, that's right.
Alright, and revenue income?
Well, revenue income is the money that comes into the business from performing its day-to-day function, as in selling goods or providing a service. The nature of the revenue income depends on the activities that the business does to bring in money, with the three ways being through sales, rent received, and commission received.
Oh, I see now. So capital is long-term, and revenue in short-term.
In layman's terms, yeah. Exactly that.
Well, thanks for explaining that to me. So where are you headed up to?
Oh, I'm just headed up to Steinbecker's office. There's a problem with the accounts.
Oh, I see. That doesn't sound good.
Yeah, I agree. Well, I'll see you later, Kramer.
Oh, Mr. Seinfeld. Hello, sir, Kramer. What are you up to now? Oh, I was just asking George and Elaine from accounting about capital and revenue income and expenditure, because I didn't really know anything about them. Well, why didn't you ask me, boy? I can tell you everything that you need to know. I am the owner of this entire corporation anyway. Well, I just figured, with you being the owner, that you would be too busy to explain it. Seeing as you're in charge of so much, I have plenty of years' experience. I can certainly run things smoothly and still have time for everything else. If you ever have a question, don't be afraid to ask me, boy. Well, I guess I did have a question for you specifically. Well, spit it out. Come on, I don't have all day. Alright. When Elaine was telling me about capital income, she talked about how it was used to set up businesses and buy assets. So I wondered, how did you start up this business? What was your capital income? Well, it all came from my own savings. I didn't borrow a single penny. I worked hard, and used the reward from my own hard work to open up Hart Van Lay Industries back in 1976. I'm a sole trader, as I funded the capital income myself, and did and still do own the business myself. A sole trader? What's that? Come along and I'll explain it, lad. So you have many different types of business. You typically have a sole trader-owned business, and a partnership-owned business. I'm guessing the partnership means that more than one person owns the business? Precisely. Now you're getting it, lad. So a partnership is when two or more people join together to set up a business as partners. Each partner would be expected to contribute towards the capital income, hence increasing the potential amount of money available. Partners also share decision-making in the profit. In most partnerships, any loans taken out are still secured by the partner's own asset, so this is still a high-risk option. There's also a limited company, a business that is registered with Companies House and issues shares to its shareholders. The shareholders are the owners of the business and all contribute towards the capital income. Shareholders normally receive a voting right, and the more shares they own, the greater their ability is to influence decision-making. Shareholders are rewarded for their investment by the payment of a dividend. This is a share of the profits. And then you have a sole trader, as in a business owner like me. A sole trader is a person who owns a business on their own. They therefore have to find all the capital income from their own sources or personal loans. Sole traders often invest their personal savings into the business or borrow from the bank using their personal assets, such as their house, to secure the loan. This investment is a big risk for a sole trader, as they are ultimately responsible for the debts of the business. Being a sole trader can also limit the amount of money available and can therefore restrict the size of the business. However, if successful, the sole trader can keep all of the profits for themselves. So you didn't get a bank loan or anything? You put all of your own money and savings into the company? That's right, boy. All of my own hard work and money. Of course, not all sole traders like me can become this successful. I suppose it was lucky that I had enough of my own savings back then to start it up. Though they are all a risky option, I believe a partnership is the best way for a business, purely because there are others to assist in the development of the capital income. Well, thank you very much, sir. I appreciate this a lot. Don't worry about it, boy. I'm glad I could answer your questions. Hey Kramer, did you find out what it is you wanted to know? I sure did. Even Mr. Seinfeld talked to me about it. He talked to me about sole traders, partnerships, limited companies, and how capital income and revenue income are different in the three types, so I guess I found out what I wanted to know and more. Well, that's great. I'm glad you found what it is you wanted. That's all, folks.